So this will be the quarterly pension board meeting of the Urbana Police Pension Fund. Those present today are Ron Eldridge, myself, Steve Royal, Elizabeth Hanna, Dave Smizer, and Patrick, our investment advisor. We expect Jim Dobrovoni to join us shortly. The only thing I want to say to start with is that I doubt that she watches this, but I'd like to thank the mayor very much for appointing Ron to the board. I don't think there could have been a better appointee or anybody that's got a longer, more skin in the game than Ron as far as this board and the fire board also. So thank you to the mayor and thank you, Ron, for accepting.
You know, when Dave called me, I told him, I said, well, I need to think about this because right now I got the best of both worlds. You guys treat me just like a board member. I get input into everything just like a board member, and I don't have to do any of the lousy training.
Well, there's not as much training anymore either, so.
Yeah, we're glad to have you back.
So Dave, you're on.
Okay, well, I'll take up. So the meeting's been called to order, so we'll go. Does anybody have any input on the minutes from our April 24th April 24th meeting?
I'll move approval of the minutes of the April 24th meeting.
I will second that.
Okay, all in favor?
It's got to be roll call.
We need to do a roll call vote for everything, right? So I'll do a roll call vote. Start with myself. Yes. Elizabeth?
Yes.
Steve?
Yes.
Ron?
Yes.
Okay, motion passes. Minutes are approved. Get those signed. Next on the agenda for old business is the Public Pension Administrative rules. This is something that we've been carrying over from meeting to meeting. I don't have a whole lot of input myself on what. Does anybody else have any input on what we should do with these or need to do with them?
Well, so at the meeting this morning, Dobie said he had created like a revised draft and emailed it out, but I had never seen it. And I know when he mentioned the changes, there were 2 changes that I gave like months and months and months ago that he didn't have. So I don't know that I've seen the current draft of either police or fire administrative rules. Did you guys get an email from Dobie with that?
I don't have any recollection of seeing them anytime recently.
I got one. Yeah, I got one about maybe 4 or 5 days ago. I didn't, but I'll be honest with you, I didn't pay much attention to it.
Yeah, I mean, I guess
I'm not sure how many of these rules and things are going to be changed all around once the state takes over. All investment stuff is going to be completely
right. That's all going to be irrelevant, but so I guess I'd not be comfortable voting because I haven't seen the current draft that I think we're supposed to be voting on.
And I think we should kick the can down the road a little bit further for 2 reasons. Number 1, we have not all read it. And number 2, let's wait till Dobie's here sometime that he can advise us on any details of it. Things are likely to change in the near future anyway. Which brings up another quick question, Elizabeth or Patrick or anybody. Has the state been assuming any of this money yet, or is this still just a work in progress?
I don't, as far as I know, I don't think, nobody's transferred their funds to the consolidated fund. I still think they're having regular meetings, but I think they're still just getting up and running and figuring out how it's going to work.
Okay.
Has anybody heard different?
Well, what Dobie said this morning was that they're supposedly by law, they're supposed to have this election by the end of this calendar year. And he said it's probably going to be real close to that date because they're having real difficulties just getting everything gathered together. And then they have another calendar year by the end of, was it 2022, Elizabeth? He said they were supposed to have all the assets transferred? Or June
it was 2 years from the date it was first approved, and I don't even remember anymore when that is.
I think it's June of 2022 by law. They're supposed to have the assets.
I think it's before that because
okay.
I think it was approved like 6 months prior. I think it might be end of calendar 2021. I don't know, Patrick, do you know?
So I think the plan is that by next July, they will have the audits complete. So first they're going to do an audit of each fund. And then once you get that audit complete, then they'll start grabbing those funds assets. And my personal belief is they'll start with the largest accounts first and work their way back down to smaller accounts. And you would be like considered on a larger fund, especially if we get above 50 million, we need to get going in the right direction here, but above 40 million is a good size fund. Supposedly next June is when they're going to start, hopefully have things in place to start it. But I'm hearing on the police side, there is a lot of just challenges in coming together on what they're trying to do. And on the fire side, it's been a little bit smoother, just from a standpoint of, I think it's their board members might be a little more pliable is all. So I think there's been some real struggles on the police side from what I've heard at the meeting levels.
I guess we'll know when it's time. I guess somebody will tell us. I don't know. But it does change. I mean, we talked about it this morning. It kind of changes how we think about investment decisions a little bit, because we're not making investments for the real long term now, because they're going to be doing that.
Well, I kind of agree that probably in this, regarding these administrative rules, we just kind of hold off until we get some. If we're talking about another year, it does seem kind of a short time frame, because they're going to have to be changed probably quite a bit once the consolidation occurs. So I don't have any problem tabling it again until the next meeting, if everyone else is comfortable with that.
No, let's just let it ride. I mean, some of them we're going to need regardless, because they have to do with kind of procedures on the unrelated to investments. So we probably do need to do that at some point. But as far as I'm concerned, we could strip out all the investment stuff, because we don't need it long term.
Okay. Moving on to the next old business item, the IDOI audit. Did the rest of you get sent a copy of the audit? I don't know what there is to do or say about it, other than to note that we received it and we filed it. Ron, didn't we already respond?
No, when they first did the audit, they called me, and so we responded to a lot of the things, but they never sent anything formal in writing until just, a couple months ago. So Brian went ahead, I helped Brian, we went ahead and did the response, and I think he got you guys' signatures and sent in. So as far as I know, it's done with, and I just, maybe approve the response or just note the response was sent in.
Okay. Yeah, I think that. Does anyone else have any input on the audit? Now, again, this was an audit that occurred in 2014, and they finished in 2015, but never technically finished, and found out that they never technically finished, so they gave it to us in 2020.
Changes and benefits and things were implemented a long time ago, and the board all approved those, some retroactivity and things. There were some things 3 or 4 things that they pointed out that were not correct, obviously not correct, and so we sent them documentation showing why it wasn't correct. And then there was that standard one about the conversions, where they disagree with Dobie's firm and how he calculates those conversions of old people that have been there a while. And we've had 4 or 5 of those, and we've always responded the same, sent them a copy of Dobie's opinion, his firm, and they've just never ever done anything with it. They understand it, because they've been at all the training sessions and things. They understand the difference in opinion, and they won't say they agree with it, but they don't do anything about it. That was Mike Cooper is what it was. But there's been 4 or 5 others too that are in the same, where they work beyond a date which allowed them to use, in Dobie's opinion, a conversion rule that was much more favorable than what is currently in place.
Okay. Well, with that being said, I suppose there's really nothing that we need to vote on regarding that either. Does anyone else have anything they'd like to state about it before we move on? Okay, we'll move on to new business. First item, public participation. I received no emails expressing anything that anyone wanted to me to read into the record. So with that being said, we will move on to the next item, which is the Ben Crane refund of contributions. This is something that I believe that had occurred prior to the last meeting, but didn't make it on the agenda. So in order to make sure we did it properly, we put it on the agenda this time, just for record keeping purposes. Ben Crane no longer works for the city of Urbana. He moved to the University of Illinois Police Department. I have a letter that he drafted dated February 19th, 2020, in which he formally requested a refund of pension contributions and recognizing that it's final and irrevocable. Ron, we have already paid that out, correct?
Yes.
And so really that's more of a record keeping thing. It's noted in the agenda. This will be filed away in his file. Next item, Chris Welchel disability hearing, still pending. I believe they are still in the record gathering phase. It's been slowed down quite a bit, obviously with COVID and such. We have not yet gotten to the point where we are scheduling IMEs, but Dobie's firm is on top of that. I just got an email, I believe yesterday, noting that it's still in progress, essentially. So no real news to share with the board, other than if we get to the point where we have the IMEs at some point, we will need to schedule, as we always do, a special meeting at some point for that hearing.
Dave, I have a question about disabilities.
Sure.
It used to be our policy in the past was when we awarded a disability, it was retroactive to the last day he was on city payroll. So that, he got paid by the city and then boom, he had no more pay, and so his disability kicked in.
Right.
Is that still, you think that's still our policy, or is that changed with like in his case, where he's been on family medical leave without pay for a long time?
Yeah, I think that's going to be something that we're going to have to come to a decision on as the board as to how far retroactively we go back, depending on whether it's approved or not, obviously.
Right. If he's on FMLA, he's still an employee. He's still receiving benefits. So
he's still receiving benefits, but I think did I just see Dobie jump into the meeting?
Yeah, there he is. He's muted.
Oh, okay.
Hello.
He's not paying into the fund though, because he's not making pension contributions, because if I understand correctly, he's out of paid benefit time.
He's on unpaid FMLA. So, yeah. I mean,
so
I don't know. He's still considered an employee. He's still receiving benefits. He's just not getting paid.
If I was him, I'd be making the argument, hey, my last day, and I got no money to live off of, and I was disabled. And I would have done this hearing way back a long time ago, except that things occurred out of my control, medical stuff, or the board dragging their feet, or who knows what the argument would be. And I'd be making that argument if I was him, that hey, this should have occurred a long time ago.
So Dobie, can you help us understand? So if somebody's on FMLA unpaid leave and they've applied for a pension, at at what point are they considered retired? Like if we do something retroactive?
The issue is really, when did he apply for his disability? And, if he's disabled and he receives the pension, it'll be retroactive to that date,
But to what date?
to the date that he applies. You could sit there and wait, forever. And you can't complain that, well, hell, I was disabled 2 years ago, but I'm just applying now. I want to relate back to the date I was disabled. The board can't be held accountable for that time, I don't think, until the guy applies for disability. That's when your payments are retroactive to.
So I think the date he applied, he was still on our payroll. He was still getting paid.
Correct,
Okay.
yeah.
But and now he's on unpaid FMLA. I mean, from the city's perspective, he's still an employee, even if he's on unpaid leave. But
Yeah,
so
but we don't receive any contributions from him,
right.
and you don't get what you don't pay for. So yes, if we have an application pending for his disability that kind of preceded his, since he's still a city employee, the date we get the application is the date that any benefit that we're going to maybe grant him is retro to, regardless of his status on FMLA or whatever. I don't know if there's offsets or not, any of that kind of stuff, but from a pension point of view, the benefit, once he applies for it, that's the key date. It's kind of like the guy that sees he's going to be fired, and just before his disciplinary hearing, he files an application for disability. He has a disciplinary hearing, he gets fired. He's no longer an employee, but he got his application on file in time to be considered. If the board subsequently finds he's not disabled, then the guy's still got whatever benefit he might be entitled to by way of retirement, or just give me my money back, or whatever. But it's the date of application that's critical as far as the board is concerned.
So if we gave him pension, I mean, and I don't know what's going to happen, but if he got a pension retroactive to the date that he applied, he's going to receive a pension for a period of time when he was still getting paid to be a police officer.
Well, that's why I say there are probably offsets,
Okay.
All
right. Well, we'll
if he's
figure it out
actually
when we
still
get there.
working, if he either, it's kind of hard to apply and still be working. It's a hard argument to make. I'm disabled. I
Yeah.
can't do police work.
Well, I think it's going to be months before we have all the IMEs and everything anyhow. So I guess we got time to puzzle that one out.
What's this gentleman's name? I missed that.
Christopher Welchel, so he'd be the third note under new business. Chris Welchel disability hearing.
Okay.
So yeah, we're still in the record gathering phase, is my understanding, and the IMEs have not yet been scheduled. It's simply, everything slowed down with COVID and such, and there's quite a few records to gather, is my understanding. So since he's made the application for disability, he's used up all of his benefit time, so now he's on unpaid leave status pending the hearing, whenever that might be. Anything else to add on that note? Okay, moving on. One we've touched on a little bit, board appointment, Ron Eldridge, appointed by the mayor, new term expires 6/30/23. Welcome back, Ron.
Thank you.
And I guess we'll move on from there. This is going to be one that maybe Elizabeth or Ron, do you have any input in the tax levy actuarial valuation with Lauterbach and Eamon?
So what this really is this goes back to the agreement where the city's processing the payroll now, and in that agreement, the pension fund agreed to pick up a couple things that had been in the city's budget. And Ron will make the point that the city pays in the end anyhow, which is correct. But in terms of my finance department budget, I couldn't deal with the staffing issue to do the payroll without doing this. So anyhow, the way this is done is there's an engagement letter that says, it's basically the contract that says we're hiring this actuary to do this work. And so they've given us an engagement letter, and I believe it's for 3 years. It's for June 30, 2020, 21, and 22. So if we approve this, they're going to be our actuary for this year and then the next 2 years.
Okay. Does anyone have any questions or input? We have used Lauterbach and Amon in the past. I mean, I know they're a big firm throughout the state, and I believe we've used them previously, correct?
The last few years, yeah.
Yeah. So there's really nothing new as far as that's concerned. But so we would need to take a roll call vote for approving using them. Is that what we would need to do?
Yeah, I'll make a motion that we approve the engagement with Lauterbach and Amon to do our actuarial review for FY 2021 and 22.
Is there a second?
I'll second that.
Okay, we'll go ahead and do a roll call vote. Dave, yes. Elizabeth,
Yes.
Ron,
Yes.
Steve.
Yes.
Okay, motion passes. Next item on the agenda, annual financial report.
Yeah, I have actually 2 reports that I sent out. The first one, which I'm not going to spend much time talking about, was the same quarterly financial report that I sent out. This would be for the quarter April, May, and June of 2020. And there's really nothing unusual here. I mean, our managers were real active in buying and selling. All of them were. There were no changes in any benefits during that time. In the next quarter, the quarter coming up here, July, August, and September, there's going to be three changes. Andrew Charles will get his first raise 3% in August. He hit age 55. And Bob Fitzgerald will hit age 55 in September, so he'll get his first raise of 3%. And Dave DeYoung, of course, passed away July 2nd with a dependent, so he transferred from a service to a dependent pension. And I'll try to answer any questions if you've got about this quarterly report, but I'm hoping to spend more time on our annual report, which has got a lot more information that I'll touch base on. Is that okay?
Does anyone have any? Yeah. Does anyone have any questions for Ron for the quarterly report?
No, but we probably
not-
need to have a motion to receive it and enter it into our records, don't we?
That'd be fine, or you could do both of them, I think, at the same time if you wanted to.
You can do a joint motion once you've had the other one, or you can do them one at a time. But it has to be a roll call vote.
Let's just do a joint motion if nobody else minds. Yeah, I don't have any questions. I will just note that, like you mentioned, Dave DeYoung did pass away. He didn't make the agenda. I just got his death certificate a day or 2 ago. That's been passed along to Carla, so I think we probably need to put that on the agenda for our next quarterly meeting, just to make a record of it. But I'll get that done. So moving on to the annual.
Yeah, the annual is the one that starts out, the letterhead to the members of the pension fund. We had a year that showed an increase in our net assets of $207,000. And given what we know has happened in the world, a lot of people look at that and say, well, that wasn't too bad. It wasn't a huge loss. We actually gained, but in reality, looking back over the last 15 years, that's the worst year that we've had. The second worst year was in 2016. That's when the stock market really crashed, if you recall. That was about 445,000 increase. So it really wasn't a good year because of the downturn in the stock market and the equities by any means, I think that you can argue. I'm gonna move on a little bit and talk about some of the other things.
Can I ask a question, Ron?
Yeah,
Isn't that actually the third worst year? Because it looks like 2009, it was a negative 5.1%, down $1 million.
oh, yes, I'm sorry, excuse me, Elizabeth, you are exactly correct.
Okay, I just want to make sure I was understanding it, that I didn't miss
Yeah,
something.
you are
Thanks.
exactly correct. I overlooked that. 2009 was, of course, the big crash was back in 2009, and that was $1 million loss. And then last year the 207,000, and then the next year was 16, which was a positive 445. So okay, our investment return last year was 5.1 on our fixed, all our fixed, which included the gains. So that was actually a very good year for them, considering, the coupon rates are less than 1% probably, or something around that maybe. The equities returned 2.5%, and the total return was 3.5%. Over the last 10 years, our total return has averaged 6.4% a year. And that's compared to the actuarial bogey of 7.0. So it's pretty close. Maybe down a little bit because of the downturn last year, but without that, or even by this time next year, hopefully, I think I will be pretty close to that 7%. I listed, in the letter, I listed all the activity in the mutual funds last year, and there was a lot of it because we sold off all those ETFs, early in the year, and bought other index funds as well as some other things. So there was a lot of changes there. In the benefits, there was one new disability pension awarded last year, and that was Michael Hedinger. And one converted to a regular service member from a disability, and that was Oscar Gamble. So the total number of disability pensions stayed the same at 12. The number of regular pensions increased by 4. We had retirements of Andrew Charles and Bob Fitzgerald. Andrew Cobb was on a deferred pension, and he began drawing benefits last year, so I put him on. Let me see, 4. What's the other I'm missing? Oscar Gamble, yeah. Oscar Gamble converted. He's the 4th. The average age of our pensioners has remained about the same in the last 15 or 20 years. The number of service pensioners has increased in 20 years from 18. We only had 18 service pensioners 20 years ago, and we now have 32. So those have gone up a lot. There are currently 5 people that are what I call deferred pensions. Sean Cook, he's eligible to draw in December of 2033. He'll have 18 years of service. Nathan Hills is eligible in February of 2040. He'll have 8 years service. Matt Rivers is eligible in September of 2041 with 9 years of service. Shannon Barrett is eligible in September of 2035 with 14 years of service. And this one here, I'm not sure what she's at. Elizabeth Alfonso, I had her, she is eligible to draw in July 2048 with 9 years of service, but now she's back as an employee. So
she took FMLA for birth of a child. So yeah, she's back.
So I guess she'll just have a break in service. So she did not contribute any pension. So I guess she'll just have a break in service and be back as an active, I guess.
I suppose so. Is there a way for her to pay that time in if she wanted to do so?
I think she can. There's a
I don't
time-
know how much she can. She probably can do 30 days worth, but beyond that, I'm not sure. I don't know. I'll look.
Yeah, and I thought it had to be done within like a certain amount of time. I could be wrong, but if that's the case, we want to let her know soon so she has the chance to do it.
And I've never come across this before. Would she, Dobie, you think she'd be able, let's say she works another 8 years and quits, would she then be eligible for 2 pensions of each of 8 years, or?
I don't think she ever quit.
No,
Yeah.
well, even if, even if she left and she came back, you're still part of the, after, I forget how long it is, you got to work at least 3 more years to increase your pension. Your money's still going into the same fund. So there's not 2 separate pensions or whatever. Now, if you went to work for a different municipality, held 2 jobs, and I've seen that on the fire side, you can draw 2 pensions.
Okay, so she would just have one pension
Not
that
through
would
us.
would have a service break in the middle of it. Yeah, that makes sense.
Exactly. But now, if she can buy that time back, then there is, makes the contributions, is entitled to do so, then she has that time. So that I don't know. I got to look at it.
2 members resigned last year. We mentioned one of them, Ben Crane. So he received $19,956 in March of 2020. And was it James Walker? James
He wasn't here long. I don't remember.
he
his first
received
name.
$5,000 in August.
Yeah.
The number of dependent pensions, they decreased from 1 to 13 during the year as Christy Elliott passed away, and she was age 78. There has been an increase in the last 20 years of the number of pensions from dependent pensions from 9 to 13. There are 3 officers that have resigned. They're not vested. They have less than 8 years of service, and they've not withdrawn their contributions. So at any time they can, but without any interest, the officers are Dave LeConte. He's back in 2001, $11,000 some dollars. B. Williams in 2006, $568, and R. Smith in 2017 of $1,312. So I don't know if we can contact those people. And
So Doug LeConte, I've contacted him previously, and for some reason he wants to. He works for the state police now, and I think he was kind of betting on whether there would be some sort of a buyback ability for him to move that money over to add to his state police pension, but I don't know that that's going to happen or what. But so he's well aware it's there. Brian Williams.
I'm sorry, I got disconnected here.
Oh, hi. Brian Williams and Roger Smith are both short-term employees that didn't make it through the field training process, and they just kind of disappeared. I can again try and reach out and see if we can find them. One of them might be local, but I don't know where the other one is or have heard where to find them. So I'll see what I can do about getting a hold
Call
of
the
them.
police.
Yeah, I was gonna say, isn't that what you guys do? Find people?
Call the police.
Well, you get into this whole thing about using police resources for non-police activities, and they get really touchy about that kind of stuff. And so,
Well, if I was them, I'd rather have my money and put it someplace where I can at least earn a little bit of interest.
if I was contacted by Dave Smizer and he said, "Hey, why don't you come on in? I got some money to give you," I don't think I would come in.
But is there something you're worried about, Ron?
Hey, we have 59 active officers of the fund, and 28 are under Tier 1, and 31 are now under Tier 2. So the Tier 2 have passed.
we've crested the hill, huh?
That's all I have.
All right. Oh, just as a note, I will say that the Illinois Department of Insurance has that nice calculator for Tier 1. I just learned a month or two ago they finally have one put out for Tier 2 as well now.
Wow.
So
Oh, okay.
kind of nice. You still have to do the calculation to find the whatever it's called, the final rate of earnings for the Tier 2, but it's better than it was, which was nothing. So,
Well, and that's honestly, I mean, pretty easy for like Carla to do because it's all on the payroll system and she has access to that. It's just
Yeah.
a question of knowing which pay is included in the pensionable earnings, which is pretty simple.
Yeah.
So I'll make a motion to accept the quarterly and the annual financial reports as presented.
I will second that.
okay, second by Steve. We'll do a roll call vote. Dave, yes. Elizabeth,
Yes.
Steve,
Yes.
and Ron.
Yes.
Okay, motion passes. We have accepted those. Next on the list is, it says changes to the investment policy. Is that? That's what's on the,
We just put that on there kind of every meeting in case we want to make changes.
okay.
Because I think it happened in the past that we wanted to make changes and it wasn't on the agenda and we couldn't do it.
Does anyone have any thoughts or feelings on whether we want to make any changes to the investment policy?
Why bother? Our money's all going to the state, unless Patrick thinks we need to.
No, I don't think so. I mean, you know, the state guidelines are kind of there and they're implicit in your policy. So I don't see any reason for any changes.
Well, I suppose maybe it got left off of my copy, but the investment presentation would be next.
So is that me?
Patrick, I think
All
that's
right.
you.
So did everyone get a copy of our investment presentation?
Yes.
Okay.
Yes.
So I sent you out a shortened version. It seems to be easier to go through it, and I'll follow that up with an email with the entire report. I didn't realize that didn't go along with it, but I'll make sure I send you out the full report. Steve, do you have a question? No? Okay. So obviously, as Ron alluded to, the stock market's come back quite nicely. When I started the quarter, it was July 8th. And at that point in time, the piece that I sent out to you talks about, you know, new economic cycle equals new bull market that climbs a wall of worry. And really since March, we became bullish as soon as the Fed started supporting the market as aggressively as they could. And the continuation of that language and the stimulus packages put together, and we believe the next one coming, we think will continue to propel the market to new levels. Now, with that being said, in the face of that, as you all well know, coming from your community and many other communities, small businesses are in terrible situations, and small businesses employ a large number of people. And with the current structure of the enhanced unemployment benefit, it's very hard for small businesses to compete and bring people back to work. And so we are concerned about that part and the long-term impact that will have in unemployment and the new learned behaviors that are changing the way people shop, the way people go out for dinner, the way they spend money. You know, we think that is going to be something that is around for a while. But as you have the CEOs of the largest companies in the tech world meeting yesterday with state and or national representatives of Congress and the Senate, you know, their businesses are growing at rates that are beating expectations, and their companies are dragging the S&P higher. And we continue to believe that, you know, spending has not been impacted because of the money that's been put in to the consumers' pockets. So with that, you know, just we state a couple basic things, and I'll just go over them on the top here. Bear markets have ended rather than begun with a recession. So what was different about this bear market was it was a forced bear market, and it was a forced recession. And we went from a really strong economy into a recession and into a bear market right away. And we responded to the recessionary problems right away. Hence, we had a decline of 36% in about roughly 25 days of March. And from that point on, the market has recovered and done so very strongly. You know, the monetary and fiscal stimulus packages that were put together have really allowed for that. And with that, you know, stocks have come back quite nicely. Small and mid-cap stocks, much along the lines of what we just talked about with smaller businesses, have not done as well. And that's really just a function of, you know, their ability to get capital is not nearly as easy as some large companies. And some of their businesses aren't as diverse as some larger companies. And so this is really impacting them. But we continue to believe that the market climbs this wall of worry. And what that really means is most people since March 23rd or 24th have been scared by the stock market. And whether it was about China, or whether it was about the health crisis, or whether it was about the president, or whether it's about the upcoming election, and the list can go on and on, the market still moved higher, and people were not willing to invest. And now a lot of individual investors, you know, are waiting for a pullback to invest. And in the face of that mentality, they're also dealing with treasury rates, which I just pulled up over here. So I had them out, but so if you don't own stocks and you own bonds and you want to invest in a 1-year treasury, it's 0.117% of 1%. 5-year is 0.217 of 1%. And the 10 years at 0.53. So that's 0.53 for a 10-year bond. So what that really does is the Fed pumping all this money into the markets and lowering rates forces everything else to appreciate in value because you want to own those other asset classes. And that's really what's gone on. Ron brought up a good point. The bond portfolio has done very well. Well, what's gone on is bond performance and interest rates have an inverse relationship. So as the rates went down, as the Fed lowered rates lower and lower, your bond prices appreciate, which means your portfolio does better and better. Now, what will happen is eventually your bonds come due, and then you have to reinvest in new bonds with lower yields. And so there's a double-edged sword here. Hopefully, consolidation will take place before rates start going up, and the ability for your investments to go out and find things or buy things like private equity or buy strategies like hedge funds where you try to have stock market like returns with bond market like risk. We can't own those investments. We've never been able to. You will be able to. Should hopefully provide you with some added resources to try to hit your assumed rate of return. With that, you know, the next couple slides just talk about fiscal policy response. And I just wanted to put the charts in because this shows the Great Depression and what we did. And then it also shows that little blip down in 08, 09 compared to where we are now. And this is really the balance sheet, okay, the fiscal balance sheet as a percentage of GDP for the Fed. And you can see how much bad debt they bought, okay, much more than what was created during the Great Depression. And that's or right in line with it. We believe it's going to be much more when you take into account the next round of stimulus, okay, and further quantitative easing. The next chart just shows monetary policy is also at unprecedented levels and 50% higher, as I stated, than the global crisis back in 08, 09. Okay, so lots of money being printed, lots of money being thrown at this. You know, how long that can go on without having huge hyperinflation, you know, basically causing hyperinflation, I think is something that everyone is wondering. The one thing a note on this chart, if you look between 2018 and 2019, you can see where the bar line starts to go down before we walk into 2020 and it flies up. Fourth quarter of 2018 was when the Fed first started basically buying back, well, right before that, buying back, pushing out the bad debt while raising rates. Okay, so that's why their balance sheet went down there it started to go down. If you remember, in the fourth quarter of 18, the market tanked, right? So what does that tell you about when the Fed has to start doing the same thing, has to start releasing this bad debt to the market and stops, providing the liquidity that it's providing? It probably tells you that there's going to be bad consequences for the stock market. On the next slide, what you want to take a look at is the performance. I'll stop there before I get there with any questions about the economy or markets. Hearing none? I'll go to the,
I got one.
okay.
So are your economists speculating on how long it's going to take to see a recovery?
So from an economic standpoint or from a market standpoint?
I guess I'm thinking more from an economic standpoint.
Yeah, so from a market standpoint, we pretty much experienced the recovery right now. From an economic standpoint, this is going to be felt for many, many years. I mean, think about what you're dealing with at the community level right now. The drop in the ability to, people to pay their tax bills. Large landlords, especially in commercial business, one will expect that there's going to be a lot of people. Matter of fact, I know a couple developers that had these haircut kind of chains, hair cuttery, or I don't know which one it was, but they had bought buildings for them around the Midwest, and they had 26 of them closed. Just say they're not paying. They left everything, including their fingernail polish, their hair dryers, their shampoos in there, and walked away. So I think that is unknown, Elizabeth. Right now, everyone's worried about the consumer. The consumer seems to be doing the best because many of the individuals that are on unemployment are being paid better than they ever have. And if you're in construction, or if you own a hardware store, or if you're a painter, or I have a masonry guy at my house today, they're busier than they've ever been because people have been at home. And so they're actually spending money on improvements and projects. Home building is up. Home sales are up. Pretty interesting, that homes are selling right now. Well, it's a function of low interest rates. The car industry has been impacted quite a bit, but I think we're talking about a decade of economic recovery, and communities like the one I live in, are shrinking. Our population shrinking. Our businesses here are shrinking. It's going to be a really scary time, I think. But from the market standpoint, it's been pretty good, and so maybe there will be some investment in things and development that we don't have. I do believe whatever president is elected, whether it's President Trump's reelected or Biden ends up being elected, I think that a stimulus package that'll probably be a big focus as another way to keep people working and get money out there. And so that would assist in hopefully curbing it. But it's funny you asked the question, because we have a lot of predictions on what's going to happen with the market. We have very few people talking about what's going to be the long-term impact from an economic standpoint. No questions besides that. We can take a look at the portfolio as of June 30th, 2020. Start with the allocation. As of June 30th, the fund was worth $40,210,705. Just right at 63.74% in equities. So about 25.5 million. Domestic equities made up the lion's share of that, and thankfully so, because domestic equities have done better up until just here recently than foreign or emerging markets. But that's just about 40% in large cap, with the Vanguard 500, which has been a great place to be, at about 24%, and ClearBridge Advisors at 15.5%. Mid cap and small cap equities just a little bit above their targets at 3.19 and 3.14 compared to 3 respectively. Okay. International equity at about 18% compared to 19, and that makes up both developed international and emerging markets. And then your fixed income at 36.26%, or about 14.5 million, with Madison and Garcia Hamilton, Madison being almost all govies, a little shorter term, and Garcia Hamilton being intermediate, a little longer, with about 21.5% or $8.6 million. And that gives the, with a little bit of cash, the balance and allocation. You know, our feelings are that, you know, the stock market has gotten a little bit ahead of itself, okay? So even though we're bullish on the stock market, we just came out this week with a recommendation that, you know, we think there could be a pause between now and the election. Our bull case scenario for the S&P 500 is 3,700. Today it's at 3233. Okay, so if everything goes well, and we actually think that the market could go as high as 3,700. Our base case is 3,250, okay? And our bear case is 2,750. So our bull case scenario for the stock market last October was 3,000, believe it or not. And we did not change that until after this crisis. And we changed it in March. So we went from a bull case scenario in March of right before the end of the year at 3,000 to now at 3,750. And that's really a function of what the Federal Reserve is doing and the liquidity they're providing and the rates coming down, okay? And so that's pretty significant and a big difference. I would stop here and bring up, because I know we've had to take money out of the account for expenses in the past. And Ron, just to kind of get an idea, what is the expense need that you see between now and the end of the year for the fund?
Probably not many cash needs from your accounts, because this is the time in which, and I guess we'll keep our fingers crossed that the Champaign County Treasurer goes ahead and distributes the monies as they have in the past. But this would be the time that we'd be getting our property tax money. So typically we would be probably pretty much okay till we get till the end. I was pretty certain until you said to the end of the year. I'm not sure about like around in December where we'll be. But I don't think we're going to have any large cash needs, hopefully, until that time.
And what is the monthly total expense need now?
Well, it's 200. Yeah, it's going to be, it's like almost 250,000 a month. Mm-hmm.
And Elizabeth, is there any indication that there could be an expectation of a late payment?
Things are so screwed up in the treasurer's office right now. I don't feel confident. I'm just going to say that. I don't feel confident about anything that has to do with the county treasurer's office. I want Dan Welch back.
We have enough cash right now to get through August. We pay our month at the end of August to get through August, and probably to get through September without any property taxes. And surely we would have some large payments by that time, I would hope. If we don't,
Okay.
we're not going to be the only ones in major problems.
You know, one thing that came up earlier around the time the levy was extended was that they wanted to give people a pass and let them tell them they could pay late, which ultimately they didn't do for the first installment. And I don't know legally that they can do that because they're levying taxes on behalf of all the taxing district, but I wouldn't put it past them to try and do some kind of extension to give, because they think they're giving people relief, but what they're trying to do is give people relief with everybody else's money. I don't know.
I wish I could give you a better answer. What I will promise is that, you know, if we get some property tax receipts in, large ones that will extend that date, I will certainly advise you as soon as possible with that, so that you know that.
Okay, maybe it would be advisable, and Dobie, your thoughts on this is just to get approval if there is a need, to have Steve or Dave or Elizabeth the ability to give me a call, and we could get money to you. If you're confident that you don't think you're going to need anything, I don't say that we need to sell anything, because if you go to the next page and we look at cash in between all the managers on the far right-hand side. So this is where we look at your accounts that Ron, you know, shows for you. And here what we do is we show them all by where the money is, what asset class it's in. But you can see ClearBridge right now has 275,000. And I imagine they might raise a little money between now and October. So if you did need some money, there's 274 there. There's a bond that came due with Garcia Hamilton. There's always money coming due on the fixed income side. Because you're within state statute, you could take it from either stock or bonds. So I feel pretty confident not having to recommend that you need to sell anything today, knowing that you have this cash that'll probably grow a little bit between now and our next meeting if you did need it. But Dobie, would it be okay if they approved that and they could call and raise money if needed?
At this point, you know, I'm a little reluctant to say yes. I would think you're going to have another meeting certainly between now and the very end of the year. And if you needed to have an emergency meeting, Zoom, boom, here you are. So I don't know. I don't like to put it that far out, just with one guy making the call or whatever. If you got a committee that wants to do it, I'm more comfortable with that. Committee of 3 or something.
Well, if you guys would want to do a Zoom call just to approve that, that's not an issue either.
I don't have a problem with that.
I'm sure we could find time that 3 or 4 of us could meet and get that done.
We just
It
need to,
would constitute
need
an
to-
emergency if necessary. So
yeah, we just need to make sure we notice and everything since it's a public meeting, but since we can do it from wherever, it's easy.
and it's a public meeting and it's going to be needed. You got to pay people. So I would constitute that at least, you know, an emergency, if not, you know, 48-hour notice at the worst. So
Yeah, I mean, I think we'll know far enough ahead that we can plan a little bit, but yeah.
Okay. Perfect. If there's no questions there,
So
I'll take you to
Patrick,
the performance.
just
Yes.
plan like there's no tomorrow.
Yeah, I've done that quite a bit. If we go to the page 6 is the performance, and I'll take you through that. As of June 30th, you know, for the quarter, you can see it was a great quarter, up 12.48%. Year to date, we were still down about 2.63%. So we'll take a look at that here in just a second. Trailing 12 months at 344, 3 years at 550, 5 years at 574, 6 years at 618, 10 years at 650, and since inception. And you know, it is amazing how different this looks than the December meeting. or the January meeting from the December numbers, but it looks much better than it did as of the end of March. So I think we're headed in the right direction, and even this month it's been a good month, and with the direction of the Fed yesterday and the continued support, I think, on both sides for another round of stimulus, I think the market continues to do well. Now, is that good economically long term? Maybe not, but it is good short term for the stock market. If there's no questions there on performance, we'll drill down and take a look at for the quarter. You can see your largest holding, which is the Vanguard 500 index at 2026 compared to 2173. Very good returns. And you can see that some fortunate timing of cash flows and reinvestments have given us the ability year to date to have quite a bit better return with the S&P 500 than just looking at the benchmark. ClearBridge has more of a value approach, and so they're not quite as robust to returns, and it's kind of the tortoise and the hare, and as soon as the hare stops running, usually the tortoise does pretty well. Vanguard mid-cap and the small cap funds both had strong quarters, but you can see how negative they are still year to date, and even how impactful that was for the trailing 12 months. International, a good quarter this quarter, but nowhere near as good of a recovery as the US. And then your bond managers, as Ron pointed out, bond returns were roughly about 5.5%. And if you look at Madison, which is a little more short-term and more government focused, and then Garcia, which is a little longer term, less government focused, you can see that the bond returns were quite robust. Any questions there? Hearing none. This is an allocation. I just updated it, just to give you an idea as of July 29th, and we were slightly above the 65% in equity compared to the end of June, but that's not including the money that Ron talked about that you have at your account with Busey. So you're fine. We're within state statute, but you can see that the account value grew to $41,900,000. So quite a bit more than I think we were just north of $40,210,000. So another $1.7 million in growth in a rather short period of time. Hopefully we continue to move in this direction. We do think there will be a few hiccups between now and October. We just believe that the markets run really, really hard. But if there's a larger than expected package that comes out of the House and the Senate, maybe the market goes higher. So I think, to try to rebalance today would not be wise. We'd stick with the allocation. You're within the guidelines. You're pretty close to everything. And as long as the tax levy shows up on time, we won't need to raise any money. With that, any questions? Okay. Thank you.
You need a motion to receive and file his report.
I'll make a motion to receive and file the financial report that was just presented to us.
Second.
Okay, roll call vote. Dave, yes. Elizabeth,
Yes.
Steve,
Yes.
Ron.
Yeah.
Okay, motion passes. That is all we have on the agenda, although, Dobie, do you have any?
I got a couple items. One is nobody wanted to run for trustee.
Oh,
So
goodness gracious.
we need to recruit somebody and hold an election quick. And while you guys were talking about the finances, I'm of the opinion on FMLA issue. The way I read the creditable service statute In computing credible service furloughs without exceeding, in computing credible service furloughs without pay exceeding 30 days shall not be counted. All leaves of absence for illness or accident, regardless of length, and all periods of disability retirement shall be counted. So as I read that, if you didn't get paid, yes, you can buy it back, but you don't get it unless you buy it back. I don't see any limitation as to when they have to buy it back, and I don't see any limitation about it like an interest rate or anything. So I'll try and follow up on that a little more, but I think they're entitled to do so.
Okay. I was trying to not forget about it, so I already emailed Betsy and said, if possible, are you interested in buying it back? So I guess we'll let you know when I hear from her.
All right.
And we didn't get any bites at all on
Nope.
the trustee, huh?
No,
Do we need
sir.
to send out another, how do we go about doing that? Do we have to send out another round of mailings?
Yeah, we will, but we will have to, but I would suggest that you kind of go maybe recruit a little bit if you can. Say, hey,
Yeah.
important deal.
I
Some of
put
these
out
new
an email.
officers, I don't know.
Right.
Don't know.
I put out an email and got actually a couple people to talk to me about it, and they said, "Oh yeah, I'd be interested." And then apparently that kind of petered out.
All right, well, bang back at them.
Okay, I will. I'll use my heavy hand and try and get one of them to sign their name on the line.
Okay. And other than that, that's all I got. Your next meeting is what, October something?
30, I think.
Okay.
October 30.
Mhm.
That's not Halloween, is it? No, 31st is Halloween.
Dave, you got kids. You should know
Only in a
that.
leap year.
I don't know how many days are in October. I can't keep track of these things.
So
Does
30th,
anyone else?
October 30th, Friday.
Okay, October 30th at 1. And I'm just going to go out on a limb and say it's going to be another Zoom meeting because so we don't need to worry about reserving any of the conference rooms. We'll plan on another Zoom meeting.
I think you're probably right.
Yeah. With that being said, no one else has anything to add. We need a motion to end the meeting at, I've got, 2:13 p.m.
I'll make a motion to end the meeting at 2:13 p.m.
Second.
There's a second, and we'll do a roll call vote. Dave, yes. Elizabeth,
Yes.
Ron,
Yes.
Steve.
Yes.
Okay, motion carries. The meeting is over. Goodbye, everyone.